Hello, everyone. Uh, my name is Nirmal Kumar, and I'll be managing this breakout session. Before we begin, a quick reminder to submit your question via the Hua app by clicking into this session and selecting Q&A. You can also upvote questions you would like to see answered. So this session is about critical minerals. Critical minerals are essential to the clean energy transition, but scaling supply chains brings complex challenges, from environmental and labor concerns to regulation and geopolitics. Today's discussion will explore these trade-offs and what it takes to build resilient, responsible mineral supply chains. Moderating today's session is Ujjwal Kumar, founder of Quantum Alliance, where he works at the intersection of talent, technology, and the physical economy, supporting innovation in energy, infrastructure, and supply chains. And to kick things off, Ujjwal will be joined by Saskia Duestin for a brief Critical Minerals 101 to ground us in the complexity of this topic. Saskia is General Manager of Innovation and Technology Systems for Rio Tinto's Copper Group, with deep experience across mining operations, processing, and critical minerals. Please join me in welcoming Ujjwal, Saskia, and our panel.
Give a clicker. Thank you. Before we start the panel or the primer, a quick show of hands. How many of you knew about critical minerals before this session? Great. Okay. Do you know at least 3 of them? Okay, that's the problem. We'll try to unpack this today. Hi, I'm Ujjwal, CEO of Quantum Alliance, and we work in the space of deep tech, particularly focusing on critical minerals. Today's panel will focus on critical minerals, but before we actually get going, Saskia and I will give a quick primer, as we told earlier. So what makes, okay, I'm sorry. That's it. So what makes minerals critical? When it meets 3 criteria under the Energy Act of 2020. First, they're essential to high technology society. Second, their supply chains are highly vulnerable to disruption. Third, these minerals have massive economic and security implications. If you look below of the slide, these minerals are in your phone, in the EV parked outside, in the solar panels on the campus, and the defense systems that protect this country. The United States Geological Survey lists 60 critical minerals of 2025. Now I want to give you a quick overview of the history of humanity's relationship with these elements or minerals. Until the 16th century, we relied on a handful of minerals: gold, silver, copper, tin, iron, used for tools, weapons, and currency, the metals. By the Industrial Revolution, coal and steel scaled up for things like railways and ships. If you'll see on the right side, today we rely on 90+ minerals for everything from cell phones to defense tech to wind turbines, which is key to energy transition. And And our reliance and demand will only increase. Over the next 30 years, the world will supposedly mine more minerals than we have extracted over in the last 70,000 years. This increased demand is in part driven by things like clean energy transition. Demand for critical minerals will be 4x by 2040, with rare earths demand doubling every 15 years. Some of the key critical minerals represented here combine a total of around $770 billion by 2040, giving you a business case. With rare earths specifically, there is a massive concentration risk. These numbers are difficult to digest. 60% of rare earths are mined in China. 90% of refining happens in China. 94% of magnet production is in China. And the downstream economic cost of disruption is estimated at $6.5 trillion. However, this concentration was not an accident. It was a logical outcome of 30 years of free trade. This is what I feel. One country made an industrial bet on processing while everyone focused on extraction. It worked for everyone until the dependencies became the vulnerabilities. Here you go. The other problem is the timeline problem. In the US, it takes 7 years to 29 years to go from discovery to production. This number, the 7 is still, like everyone says, is 15 at least. In China, that number is closer to 2 years. This timeline problem poses a central challenge to energy transition. But why I put this table, this is not about one system being right and other being wrong. Because the sequential systems prioritize environmental protection and community consent. Concurrent systems prioritize speed and scale. The challenge is how to maintain democratic accountability while closing that gap. And now to add some color to these challenges, I will hand it off to Saskia of Rio Tinto, who will ground us in how it is done in one of the biggest miners.
Perfect, thanks, Ujwal. So what I wanted to talk a little bit is about the journey that we as a mining company have been on in the critical mineral space. Now, so I work mostly in copper, and so right now you probably go, oh, well, yeah, copper is a critical mineral, so of course I'm here. Copper was not a critical mineral when we started this work quite a while ago. And so I want to talk a little bit about what the reality is, right? So we had a funny little encounter about five years ago at a meeting, and someone said from First Solar, they said, hey, we want to do more solar panels. We don't have any tellurium. Do you know where you can get some? So where do you think tellurium comes from? How many people here think that tellurium is mined itself? It isn't. It only comes as a byproduct from copper. So this is where the journey started, where we began to recognize that while people may perceive that critical minerals are mined in and of themselves, and some are, but many of them come as a byproduct or a co-product. And that's where our journey started. As we started looking at, with our copper processing, what other kinds of critical minerals could we produce? And you can see them all up there. So it's maybe not all of the 65, but it's quite a few of them. Now, are these always the highest volumes? No. But when you start to think about, as Ujwal talked about, from a permitting perspective, we have permitted mines. And so it becomes a pathway to start to explore what that looks like. So as we started to go through this journey, we thought, okay, we would start to explore this. And started to realize there were quite a few challenges that we came across as we started to think about this. Because critical minerals, as we just said, when I think we tried to ask how many people knew more than 2 or 3, it was pretty empty-handed here. And the challenge is that we talk about critical minerals or rare earths as a group, but it's a kitchen sink, and it's a kitchen sink of processing of how do you actually recover them, because for the most part, none of those critical minerals are the same. You have to actually treat them differently. And that has been one of the challenges as we think through. We often talk about the end product, that manufacturing, but we don't actually work it back through the supply chain to think, where do you actually extract or mine it from? What does it look like to process it, to upgrade it? What does it mean to then refine it? Then you get into manufacturing and end products. And when you look at a lot of policy, you look at those aspects, that often focus on the end piece without thinking about how you actually want to get there. So I always tell the story, I've talked about the tellurium piece. As part of the Critical Infrastructure Act, there was some incentive in there to make more cadmium telluride in the US. Well, what did I just tell you? Where does tellurium come from? From copper mining. Well, at the time, there wasn't any tellurium recovery in the US. So they incentivized the production of cadmium telluride because they wanted to think about it from a critical mineral. What did they do? They actually incentivized more importing into the US of tellurium. And so that's that aspect that we've started to see when people think about critical minerals, is you can't just think about that end piece. You've actually got to work it backwards and start to think about all of those aspects, because that's where some of the interesting challenges come from, and they're not always straightforward. And so we've seen that there's gaps in that supply chain. We don't always have integration across that. And so that's really how we started thinking about how do you tackle those critical minerals that you saw on that first page. It's not a single approach, and often we as a mining company are not making that final product either. We might be making an interim product, so who could we partner with for that refining? So as opposed to traditional mining companies, our job is to think about what's the maximum recovery, what's that final product? And we started asking, but who could we partner with? Who could help us in this process? And that's where we started to realize some of the challenges. Critical mineral markets are small. Compared to copper, it's nothing. It literally does not even show up in many, many decimal places down in our bottom line of what critical mineral production is. Yet I get asked all the time by senior leaders, ooh, critical minerals, rare earths, like they're like dollars, this must be big dollars. And then I have to break it to them that it really isn't, right? So the markets are small. They're opaque. Most of these are not traditional commodities. They're offtake agreements. There's various aspects that we really can't get any visibility. As we've looked at some of these critical minerals, we've seen they're 100% imported. We then ask our commercial teams to try to figure out who's buying, what are they buying, and you can't even find that out sometimes. So it becomes a really big challenge when you start to think about how do you improve this mineral production if in the end you don't even understand the market. Then you start to work backward. I've talked a little bit about that material access, the production. It then comes down to people and expertise. As other countries have made some choices in terms of not just production, also the expertise and the people that understand these technologies. And when you look at the mining schools, you look at the extractive metallurgy schools in the US and other countries, not just the US, it does not have the support that it has had in other places. You look at a single university in China graduates in that university more people than all of the US put together. So when you start to think about that gap, how can you catch up from a production standpoint? So I've talked about the supply chain infrastructure. We've already talked a little bit about regulatory and policy, but all of those things come into play, and we'll talk about more in the panel, but I wanted to highlight a couple of those aspects. So I believe that from a perspective, if we want to change critical minerals, it can't just be from a company-private perspective. It also has to be a combination of public, government, other aspects of that, because it actually takes all four of these pieces that you can see up here for us to change it. And so that's kind of what I wanted to give as a bit of context, because people don't always understand how complex the critical mineral market is and all of the pieces that go into it. And hopefully that set us up well for our panel. So over to you.
Oh, thanks. This was great. Thank you. And before we start, we get into the hard questions. I would love for each one of you to just give a brief intro about yourself, name, organization, and one most counterintuitive thing you saw when you came in this sector. Maybe start with Saskia.
So I'm Saskia Diveston. I am the general manager for innovation and technology systems. What does that mean? I look after R&D and digital for copper. It means I don't just support here in the US, we have operations across the world, and I support what that looks like from a new technology standpoint. I kind of gave it away already. My biggest learning about critical minerals was that, and rare earths, was that the dollars are not there, and that was a really big learning that we had to go through, that when it boils down to economics, you cannot compare these to the traditional commodities like copper and iron ore and aluminum. They just don't compare. And I think that's a gap that people just don't understand.
Hi everyone, Abhi Parmar, mining and material science engineer by background. I worked in the mining and metals industry for 10 years, currently a University of Chicago Booth School of Business student, but prior to that worked at Rio Tinto as well in their corporate development and strategy work.
Great, thank you. Nick Kumleben, Director of Energy at Greenmantle, a geopolitical and macro advisory firm, where I work with a number of large financial institutions, US and allied governments on anything at the nexus of geopolitics and commodities. Over the last few years, being based between Washington and Cape Town, that's led me into a focus on this sector. The most surprising thing I found out is that when I started looking at this space, I made a huge category error. I came at this from a global macro perspective, had done some work in oil, had done some work in copper, and so I knew a thing or two about globally traded, fairly uniform commodities. And these aren't commodities, they're specialty chemicals. These are tiny markets, as Saskia says, with incredibly complex and specialized requirements and many, many, many steps in the supply chain and in the value chain. That I always say they're more like semiconductors than they are like crude oil. These are the end product is complex, very, very small, and very, very specialized.
Sal?
Awesome. Thank you. Good afternoon, everyone. I'm Salvador Gomez Colon. I'm a researcher. I think from my perspective, the most counterintuitive thing, or I guess the biggest thing I've learned while working in this space is that there frankly is a bit of a definition problem, and I think there's some of the vocabulary is opaque. Not all critical minerals are rare earth elements, but all rare earth elements are critical minerals. But rare earth elements aren't rare because you can't really find them. They're rare because it's very, very hard to extract them and to process them, as Saskia was saying. And I think that foundational knowledge is somewhere where I find myself having to repeat that in many conversations. So that'd be my contribution to that.
Thanks. Great. Let us dig in. Abhishek, I want to start with you on the big picture. Clario has been warning about minerals famine. Which minerals, which timelines, which industries get hit first, or are we already in it?
Yeah. So I think I forgot the counterintuitive when I was doing the introduction, and I think my counterintuitive is mining is capex heavy, and then when we start investing into projects, by the time we start production, the demand might have changed. So I think I've seen that a couple of times, and that's the most counterintuitive thing I've seen. To your question, so at Clario, I do more of the strategy and VC work. Obviously, if you read the IA reports or any report right now, it's copper, lithium, nickel, rare earths. So there's a list of commodities that are very essential right now for industries. If I have to answer like where across the industries, I think defense sector is definitely hit quite heavily. Grid infrastructure is also hit. But also I think you are neglecting the fact that like we are already in it, in the sense if you see a case of Ford Motors last year, they had to stop their plant, one of the plants, for 3 weeks. And one of the reasons was they didn't have enough magnets. And you would be surprised where these magnets go. It's in the windshield wipers, and they didn't have the magnets to build that. So I think they already started signaling that there is a supply chain risk that companies are exposed to. And I think it's across commodities, in my view, that we are already exposed to it.
Oh, thank you. From what I heard, like most companies are sleepwalking into it. How do you wake them up? You?
Me? That's a very long question. We can go on for hours, but I think in my view, so mining companies, again, you have to understand that we work in jurisdictions that are tough. We have permitting challenges. It's not very easy to just turn on the switch and the mine starts producing. There's a lot of due diligence done before a mine is started. So again, to the timeline perspective, it's like 15 years or 20 years to get a mine built. From start to finish. So I think to me what I'm seeing more is more downstream companies are starting to understand a little bit more about mining. You have seen investments from Tesla into mining itself, into lithium mining, refining process. You've seen Apple trying to get into recycling. You've seen GM starting to invest into the lithium producer itself. So I think it's happening more. There's even policies starting to come up right now where they're investing into companies, direct equity investments, which is unheard of or un-American of. So I think we're going to see more maybe, but I think you have to understand that there are a lot of moving parts over here. Mining companies have challenges with permitting to find new deposits. from a policy perspective, there's obviously geopolitical tensions that go on, and just across industry, downstream companies are the most hit as well over here. I don't know if anybody else on the panel would love to add to that.
Yeah, I can perhaps come in there. I mean, I think what we've seen is a world whereby that 30 years of free trade led to a lot of market power, especially in China, and that worked extremely well for consumers for a very long time because this stuff was made cheaply, reliably, and to a very high degree of quality. What broke in the last 2 years was that reliability element and that supply security element. And the only way to fix that is either through government subsidies or through offtake premia for someone to pay for security of supply in a higher cost jurisdiction.
Great. Moving on, during my discussions with a couple of industries, when I speak about this topic, they say, what do you think about recycling? Because they think recycling is an obvious answer. I'd love to ask you, Saskia, what are your thoughts about it?
Well, I know you all think what I'm going to say. Since I'm a primary copper manufacturer, I don't like recycling. And that's not true at all. It is part of the solution, right? It has to be. And we need to recognize that recycling is not as straightforward as we think, right? There's various aspects. I always like to talk about the geologic ore body and the urban ore body. And we haven't even started to explore what the urban ore body of recycling looks like. And if you think a mining ore body is complicated, the urban one is that much more. Because now you're not just talking about concentrations and volumes, you're now talking about distance and time, right? If you think about an ore body, you have, and maybe you have a lower grade, maybe a typical copper ore body has 0.5%, 1%. You look at a recycling stream, look at e-waste, everyone gets excited about e-waste. Well, maybe e-waste has 5% copper, but now think about the size, probably none of you don't even know how big an ore body is, right? So our Kennecott mine, 2 miles across, okay? So, but you can think about how a truck is driving across those 2 miles, but now think about the copper in your e-waste. How far is that spread out? Now you're talking hundreds of miles, okay? So again, you start to get to some interesting trade-offs there, where recycling is absolutely part of it, but it isn't just a one-for-one solution. It's also a time component. Where's the majority of the copper has it gone into? Well, it's gone into infrastructure, copper, piping, wires. E-waste is coming, but when does that come back? Comes back in 10, 20, 30, 40 years. So what we're recycling today is what was produced 20, 30 years ago. If you start to think about, same thing with battery, we talk about electric vehicles, but as we extend the life of those electric vehicles, when is that material going to come back? Not next year. When do we need the demand? Next year. So recycling is a component, but we've got to think about it in a big picture. The other aspect that you have to think about is that from a recovery standpoint, recovery from these recycled materials, how do you separate them? How do you challenge that? How do you think through those challenges? Not always even as straightforward, and in many cases we haven't solved that chemistry, and we need to think through that. So again, part of the solution, but it's actually a long road for us to have it be a key component from my perspective.
Thanks. What I'm hearing, the narrative is ahead of the reality. Yes. Yeah, let's talk about what happens when the supply gets cut off. We touched upon it in the beginning, but Nick, Ford shut down a Chicago plant for the week because their earth exports were restricted. What do you think? How deliberate was that, and where is the real vulnerability at in the supply chain?
Well, I think you laid it out in your slide deck right here, right? It's in the concentration of processing and in magnet production in the specific case of rare earths. Look, this is obviously a deliberate policy choice in a similar way to some of the export controls that the US and other countries have undertaken in other sectors. The question becomes, and something we'll all dive into in different ways on this panel, is just how feasible is it to reduce that vulnerability? What is the timeline? The Secretary of the Treasury would tell you it's 18 months. If we define that as under 50% import reliance in, say, 10 of the 50 to 60 critical minerals that currently have very, very high import reliance, I would be pretty impressed by 5 years as an outcome here, and that's being generous. So as we think through that timeline, it brings up a lot of real-world concerns in terms of everything from industrial output to strategic policy questions, and the question that we need to try and answer as an industry, as business leaders, is what can actually be done to shorten that timeline, and what are the partnerships, what's the human capital to come in, how can we get this done? Because it needs to happen.
Thanks, thank you. You touched upon the policy aspect, and I'd love to invite Sal. Talking about policy, US has now Project Vault, Section 232, Pax Silica. I was in fact in the India AI Summit when India inked this, India became part of it, all in the last 12 months. I'm wondering, what would it take all of this to stick?
I think that's the question that pretty much the entire world is asking itself, Ujjwal. I think just to sort of get an understanding of the different mechanisms that the current administration is working through to build this critical minerals resilience. You mentioned first Project Vault. So Vault is a $10 billion stockpile project whereby the government, working through EXIM, the Export-Import Bank, which is part of our development finance organisms in the government, is basically making agreements with the OEMs, which are the original equipment manufacturers that are requiring and using these materials to buy into stockpiles whereby they will then source their minerals for production, as you were saying, for the windshield wiper or whatever, obviously in more sophisticated defense applications, be it GM for a car or Boeing for some sort of aerospace system. That's what they're depending on. Section 232 is the statutory authority that the current government, acting through USTR and other agencies, it delineated that the critical minerals reliance is a national security threat and allows them to negotiate agreements and to act in particular ways to try to reduce that reliance. And then the third element you mentioned, Ujjwal, Pax Silica, is a pretty notable sort of gathering alliance of like-minded countries. Right now, I think it's roughly 13 nations that have signed on, but the idea here is to create a coalition of the willing, if you will, that restores confidence in the supply chains by looking at semiconductors, critical materials, technology inputs, all of that, and tries to build a financing architecture to support that. Now, to what Nick was saying about the numbers and the financial viability, the pledged commitment, or the Undersecretary of State, Jacob Hellberg, and the admin has presented for this is $4 trillion of investment. Now, for perspective, the total of global foreign direct investment in 2025 was $1.6 trillion. So there is the question of where you're going to get the capital to invest in this stuff to actually make this architecture stick. Now, that being said, and obviously we know this administration is not afraid of big numbers. That being said, there's a few things I think that inspire some confidence into how this might work. For example, the first is the way that the administration is exploring and engaging with price floors. So for example, the MP Materials neodymium praseodymium price floor, which is at roughly $110 a kilogram, and this is a particular combination of magnets that's really necessary for a wide range of national security applications. That price floor is roughly twice what that magnet would go for on the market. Now, the question is whether the government has the ability to sustain that price floor for a long time, whether the taxpayer, frankly, has the willingness to support this subsidization and this price floor mechanism. But on the sort of first view, if you can sustain price floors that are above market price, perhaps for what other materials are coming from in different countries, then that is somewhat sensible. The second thing I think that creates some sort of durability here is the way that the administration, I think fairly well, has engaged with the OEMs to give them skin in the game, right? So if they are invested in these stockpiles, if they are invested in the procurement of these resources, then ultimately, instead of having Washington giving them a subsidy, you have them lobbying the administration, lobbying the government to actually stick to their promises and make sure that these mechanisms work, because their production and their selling of products depends on it. So that's the second thing that I think makes it somewhat stick. And I think the third point that I would make is that there is widespread bipartisan consensus around why this problem is such a difficult one. So as long as you have, Senator Warren and Secretary of State Rubio agreeing on this being a particularly pressing problem, I think that creates a lot of bipartisan momentum. That being said, there's always caveats. And I think the most notable one is that a lot of the authorities under which the current administration is acting is through EXIM. And this is a particularly, I wouldn't say it's a flimsy authority at all, but I would say it's a particularly unique authority that it's currently acting on that isn't statutory for the longest time. They've tried to pass all sorts of legislation to secure mineral supply chains, but that hasn't necessarily happened. So I think there's questions about how another administration would look at the development finance ecosystem and decide whether the current system works, and if it doesn't, how they would reform that. So that would be the caveat I'd give in terms of durability.
Yeah, no, thank you.
If you don't mind, I was just curious, how can US work with its allies, like Australia, Chile? They have FTAs with Chile and Peru as well. So I'm curious, can we amplify that to reduce the risk in the commodities that we need?
Yeah, I mean, I think that is pretty much the question that as is no secret, I'm a big fan and supporter of working with like-minded countries and our partners and allies in ways that are constructive and not necessarily antagonistic. I think the biggest question we have to ask ourselves is, where is the precise problem? And to the definitions thing that I was saying earlier when I was introducing myself, the problem is not exactly in the upstream, right, which is the actual the metals, the rocks, to be very imprecise. There is an abundance of countries, including the United States, Australia, others, that have this abundance of material. The problem and the choke point, as Ujwal mentioned earlier, is where the midstream happens, where the processing and the refining is occurring. So Australia, for example, I've spoken to a lot of Australians, and they're great friends. They're really doing a very good job advocating for themselves in Washington and across the country for all the sorts of progress they're doing and the abundance of frankly, they're very well endowed in these minerals. And they're actively investing in a lot of projects in the United States to show that friendship for that critical minerals partnership. And Ambassador Rudd has mentioned that they have enough materials and enough critical minerals to cover the entire U.S. need by 2030. Now the question is, you might have the metric tonnage of the rock from which you derive these critical minerals, but the question is, how do you get the processing and refining facilities online fast enough to actually do that in jurisdictions where there is reduced supply chain risk? So that is a question that I don't really know the answer to. I hope that we can get it done, but I think there is no question that you need to work alongside like-minded partners and allies for this. And the question is actually just, how do you get the steam rolling and continuing to do?
Yeah,
well, sorry, I have to, right?
Okay.
Again,
quick 1 minute.
Yeah, a quick 1 minute, but I think this is a really key question. You've said, hey, it's available in the rock, right? We take a grade and we multiply it times a volume and we go, we've got it. But what people don't look at is, what is it associated with? Can you actually recover it? Because I tell you, that's a lot harder than people think. Mm-hmm. It's the same thing in the US. There was just testimony at the Senate that, in all of the waste in the US, we have more than enough critical minerals to recover it. I tell you, we don't. We do on paper, on math, but when you start to think about where these materials are and how you actually need to address that midstream piece, I agree with you completely. It's that midstream piece, but I worry that people think that number looks good in the beginning without really recognizing that even that number is probably not good enough once you start to run it through the supply chain. So yes, and. I think that was less than 1 minute.
Yeah, no, that's great. At least we can agree there's signals. Mm-hmm. And the architecture is building, architecture is coming up, although it seems fragile at the moment, it's too early. But moving on from there, I have going into some of the tensions which we think when we talk about minerals. I still remember speaking with you, Saskia, you mentioned to me, every one of us keep using everything out of mines, but we say mining is bad. Moving into some of those things, starting with Nick, 70% of cobalt comes from the DRC. Child labor, artisanal mining. If a responsible company exists and someone worse fills the void, what has responsible sourcing achieved? Any quick thoughts, Nick?
Yeah, look, I think it's not an understatement to say the mining industry has long had a complicated relationship with the communities and jurisdictions within which it operates. But I would also say, and the rest of the panel I'm sure can back me up on this, that having seen operations in person, seen their environmental stewardship, seen their community impacts, there is a phenomenal difference between best-in-class social responsibility in this sector and what we might call some of the more rough and ready, because that's about the politest way I can think to discuss it, operations on everything from upstream extraction to processing. And the reason this matters so much is not just because so many of these resources we need to drill out of the ground and process and turn into valuable items are in valuable ecosystems, are in parts of the world where there is perhaps a less robust community feedback into central government processes. But it's also because you actually have to use a lot of quite nasty stuff to process most of this stuff, right? The mining industry is currently on red alert because we can't get sulfuric acid we can't get sulfur, and thus there's a shortage of sulfuric acid coming out due to the blockage of the Strait of Hormuz. If you had large-scale usage of sulfuric acid in your backyard, you would really want a best-in-class operator. And that's where a lot of people are living in mine-site communities.
Thanks. Saskia, any thoughts? Well, I know, from my knowledge, I think you do not operate in DRC, right?
No, we do not operate in the DRC. I like to talk about Kennecott, right, which is a mine out in Utah, right? It's been there for 120 years. I'll be honest, most people there sometimes they don't even realize it's a mine unless they went to their 4th grade field trip up to the visitor center and went to go see it. And I think it's an interesting aspect of partnership with a community where they don't even realize that it's a mine, yet we have a great partnership with the state of Utah because they recognize what an economic benefit it is, right? And it isn't just the mine itself, it's all the support of a mine, right? Typically we say that for every job in a mine, you have 7 additional jobs that come from all of the support. So you start to say, how do you build that when it's been around for 120 years? Well, you don't get to be around for 120 years if you have, of course, there's always challenges with partners, but they can't be that contentious and not still be there. And so I think there's some interesting aspects to think about how do you do that. And so from a mining company perspective, right, we want to build mines, we want to run mines. And to do that, you have to be a partner with the community. You can't not take that approach because otherwise you don't get to build the next mine, right?
Thanks. Abhishek, how do you advise your clients on this?
Again, look, I only worked for majors in the past, so I don't do much client advisory. But what I'll say on this topic is, if you look at the downstream customers who actually use these materials, right? Just as instance, Tesla used to go down to DRC to kind of source 50% of their cobalt, and then they started this practice of join the first alliance of cobalt, where they standardize a process, increase transparency of how the cobalt comes out. Is there child labor involved? And if it is, they don't use it. So I think more and more awareness and such institutional bodies are coming up to kind of add transparency, traceability to where the materials come from. Having said that, look, DRC, I've had the fortunate chance to work there for Freeport. An interesting story is we had to sell one of the highest cobalt mines a long time ago. And unfortunately, back then we only had one buyer who was a Chinese mining company. So which kind of goes back, it's just 10 years ago. Back then, there was not a lot of interest in critical minerals, and due to other reasons, we had to sell it to China. But now today, if I look back, right, maybe the US government should have stepped in and maybe built some policies where they could have continued operation and we could have had the supply of materials, right? So I think it's just a very tough industry to work in, and I think there's more appreciation needed for this.
Thanks. So what I'm hearing, 3 approaches. One is trace and engage, exit and lose, and government backstop. For MBAs here, it's something to think about. What frameworks would you use here? This is not an easy problem. Moving ahead, talking about some of the trade-offs, I'd love to ask Sal, thinking about green transition, minerals are environmentally expensive, costly to extract. How do you make this case for the stakeholders?
Look, I think this is probably the most pressing question that we have to reckon with as we think about moving forward in our societies with these technologies and all that. And frankly, my original background was in humanitarianism and advocacy, so I really care about these questions. One of the most, I think, prescient works on this, and I am an author myself, so I love authors, love to give other authors free shout-outs. So I brought a book, The Elements of Power, by Nick Niarchos. He's a journalist for The New Yorker, and he's been covering a lot of these issues on mining for quite a while now. And he spent time in the Congo. He was actually detained briefly at one point for his journalism. And I think those types of stories, when you reckon with how harrowing the conditions are in some of these places, when you don't have best-in-class practices, when you don't have stakeholders that actually care about the conditions in which people work, right? All the minerals in our phones depend on someone being in a pit, risking their lives to actually extract this stuff, especially in these high-risk jurisdictions. Now, the question is, would you rather have a system, which a lot of us talk about liberal democracy, and we think it's this abstract concept, but a system that actually has some sort of guarantees, some sort of pressure, some sort of responsibility to stakeholders, that actually cares about human rights, that cares about the conditions in which people are working? Or would you rather have one that just, like Nick was saying, dumps sulfuric acid somewhere and is polluting the crap out of a community, and people suffer with it? And ultimately, I prefer the former over than the latter. So I think there was obviously an imperative for various reasons to proceed with a green transition, with a modernization, with whatever you want to call it, because I think, frankly, it shouldn't be a political question at this point, that a lot of these systems and these technologies are more energy efficient, they bring out the best in humans, they bring out the best in our industrial potential, and they come at a much lesser cost to a lot of communities. I think the question is, we have to ask ourselves, is what systems allow us to make that progress most responsibly? And ultimately, I think the coalition that the United States and like-minded countries can create to do this is a much more responsible and effective one.
Thanks. And the book is definitely in my reading list now. Staying with the trade-offs and geopolitics, but let's shift to supply side. Can we build chains with friendly countries? We touched upon it a bit earlier. Starting with Nick, friend sourcing sounds obvious until you look at who has the minerals. Namibia banned unprocessed exports. Indonesia banned nickel ore. Is the consensus being built on ground that has already shifted? What do you think, Nick?
I think it has shifted, and for pretty good reasons. I will propose 2 reasons, and then we can talk about some of the problems. Reason 1 is that people like us have been sitting on stages for long enough talking about critical minerals that policymakers and countries with mineral endowments have said, well, hang on, that sounds quite valuable. A bit like Saskia's bosses. I'd like a bit more of that value chain. And that's a perfectly reasonable thing to do. It's also probably, in many cases, quite a good idea economically, and from the perspective of permitting timelines in some geographies and some markets can actually help you build stuff that just have a really, really long degree of timeline uncertainty and project risk in a country like the United States. And the second question there is about the durability of alliances. What friendshoring means today, I would argue, is very different from what friendshoring meant 4 years ago in the middle of the Biden administration. We've discussed the long lead time to build a mine, to build the kind of value chains we need to set up processing plants. Unfortunately, there's a bit of a duration mismatch between a polarized democracy and the timeline of building a project like this. So in order to friendshore all this stuff, it's not a bad idea, but first we really have to decide as a polity and as a political system who our friends are. And we're not doing a great job of that at the moment.
Thanks, Nick. We are asking countries to be our friends while telling them they cannot use the tools that worked in the past. This is what I'm hearing. Is there a version they would sign up for? Like, Sal, do you have any comments here?
Yeah, I mean, I think, and Nick, you're absolutely right in how you define this problem, and in fact, the friendshoring definition really matters because on the sort of the element that really was the impetus for a lot of this push was that Indonesia a decade ago was exporting only 2% or a single digits worth of processed nickel. Now that number is at 60%. What happened here was that there was the government of Indonesia in 2020 said we are going to restrict exports of unprocessed nickel and we will only allow it to leave the country if there is the infrastructure here, if we have the political and economy to do this in-house and then send it out. What ended up happening was that you had a lot of Chinese OEMs who came in and said, fine, we'll finance a lot of this development. We don't really care about our rate of return here. We're just going to do this and suck it up because it's a strategic necessity. And they did that, and ultimately this is what catalyzed Indonesia and enabled them to be able to put up this infrastructure domestically and demand this of countries, demand that the exports that they send out are processed and refined. And obviously, what matters here is that they could do it in-house. Now, the administration has pushed a lot of forms of partnership and tried to do some friendshoring, as Nick was mentioning, but in fact, the agreement that the United States signed with Malaysia in October prevents them from doing, to Ujjwal, what you're alluding to in your question, prevents Malaysia from doing precisely what Indonesia did. Now, the assumption here is that obviously there is a lot of agreements now being undertaken between Australia and Malaysia, for example, on refining and processing and all that, and the idea, actually the context in which this occurred was in exchange for Malaysia choosing and deferring the right to be able to enact these laws, they said, we will then get a 19% reciprocal tariff. So ultimately, there's a lot of questions about whether this tariff economy is going to continue in the next 2 years or thereafter, but that was the exchange, right? There was a tariff exchange here. But what really matters here is that you have to build architectures, Ujjwal, that redefine the political economies of countries if you're going to try to work with them as partners in ways that don't put them down and actually embrace them and want them to be a part of this club of like-minded countries and not feel that the extractive practices that have been done decades in the past are continuing to be imposed upon them.
Yeah, can I come in quickly on that?
Okay.
I think Sal raises a couple great points, and another reason that kind of this makes a lot of sense coming off that. I imagine you guys spent some time over the past day or so discussing power markets, data centers, all of these big things that are happening in a slightly different sector of the economy. We haven't yet touched on quite how power intensive some of these projects are. They require large-scale baseload power in a given jurisdiction. If you've got large-scale baseload power in the United States today, you're probably selling it to Amazon, Meta, OpenAI, and so on and so forth. So to that extent, where we can partner with these countries that have the power availability as well, it can really, really improve the probability of getting a project done on time and on budget.
Thank you. Saskia, what are you looking from, because you have your like supply chains in multiple countries. What do you think about it?
Well, I think in the end, you can't change where the minerals are, right? So that's one of the things you have to start with. I think the other challenge that we continue to look at, and I'm kind of sidestepping your question because I think there's an important piece here that comes into play with this, because this is about the partners, right? It's these timelines, right? The way that companies are making these decisions to decide on projects, it takes many years of assessing from a capital perspective, are you going to invest in that project, right? Which goes back to all these conversations, the market, the risk, the geopolitical. Are you going to put in $1 billion of capital into a plant that maybe the government's going to change, and then what happens, right? There's an underplaying piece here that we can have agreements, but companies in the end still have to look at shareholder returns. And so we get this ongoing tension that underplays all of that. And then even if you do get to that decision with everything and the demand that's going on, right now to even put in, say, power infrastructure, you're talking a 2-year lead time. So even if you made the decision today and you got everything to be aligned, you're still not building it for another 2 years, right? But meanwhile, who knows what's all changed? A market has changed, and you can't go back and go, oh shoot, no, I don't need that powerhouse anymore, right? And so there's these interesting pieces that come into play with all of this, that again, in these very capital intensive markets, you have these challenges. The other side I'm gonna flag for some of these specialty critical minerals, it's actually, that's not the challenge. And people are gonna say, you just need to invent the technology. But it's not even the technology, it's the knowledge on how to recover these, right? We keep seeing the programs come out from DOE and others to now, let's have startups look at new separation technologies. And we're spending money on that, but those folks are not looking back at these aspects of what streams they're coming from and thinking through that. So we keep then throwing more money on that technology development, because that is one of the gaps as well in all of this, is in many countries, is there's simply not the technical capability to think through these very technical problems, let alone the financial, the political, and all of those aspects. So that's sometimes the things that we're looking for, is how can you think differently about that supply chain? Because there's a technical problem, but it's also, and I think that Ryan talked about it in the initial session, often then we have a technology that people are presenting, but they haven't thought about how you're gonna apply it and put it into what we call a green field, a new project, or a brown field, an existing, and how do you think about bringing those technologies in? So.
Yeah, no, that's great. And
Ujjwal, can I add one
yes,
thing
please.
just real quick? Yeah, I think just to Saskia's point, it reminded me that I think mining industry as a whole needs to learn from other industries as well. Mm-hmm. So if you look at oil and gas, you know, they had constant production, and then you had fracking, which was like a big innovation, and then, you know, now US is like self-reliant in oil and gas. I think mining also needs to learn from other industries, in my view. It could be pharma, it could be oil and gas, on how to find deposits faster, they build things faster, as well as, you know, how do they control supply chain. So I think that's something that I'm seeing, a narrative of like, okay, how can we learn from other industries as well?
Yeah, thanks. I think like coming to this country, a lot of great innovations I've seen come from adjacent industries. So great point there. Now moving towards the demand side. Saskia, demand is surging, like we all keep seeing that this much is the demand. At the same time I hear from you, okay, demand is little. Yeah. So I'm trying to understand, when like we are talking about critical minerals, 4x by 2040, and the surge of demand, everyone is talking about it. Who's writing the checks?
Well, I mean, it's this, again, I think in the critical mineral space, the challenge is that even with that kind of demand, the dollars, even 4 times, is still not enough of a market for traditional companies, right? In the traditional approach, like as Nick has said, the difference between copper, for example, as a bulk commodity versus the specialty, you could have demand increase by 100 times. And when you start to look at the cost of these, there's still a disconnect in terms of how you could actually do it from a traditional business perspective. But there still is an underlying mining knowledge that needs to come into play, that comes into how do you actually close that gap to demand. So.
Yeah. One follow-up would be like, are you seeing any downstream players who are like seem to be the like final beneficiary of the whole supply chain coming in and investing in the initial, like co-investing? Like,
I'll let Nick. I won't comment. I don't know, Nick. You've got any comments in that space?
I'm happy to. There are a lot of wonderful startup pitch decks. I hope they all succeed, because we need all of them, and we need like half the people in this room to go and work for them. For that to work, history tells us that 9 out of 10 might not. There are some players coming into this market, and I think if we look at if we look at some of the groups that, for instance, the government has partnered with that work in some of the smaller markets, there are going to be trading companies, but not the household names, your Traxxas's, your Wogans, companies like Orion on the mine finance side, who've been in this business a while, but are small enough that it's worth their time, unlike a Rio Tinto, to spend time in these markets. I certainly see a lot more private equity firms spinning out teams to focus on quite specific markets where they have some expertise in the end use sector, and thus can have those conversations with off-takers that are hard. But it's going to take a lot more focus and a lot more capital. And really, in many of these markets, a colleague of mine who's done a lot of work in the Australian critical minerals sector always says you can solve this stuff in a matter of Ziploc bags. Probably not Ziploc bags, but we don't need 15 projects in each critical mineral market to solve some of these problems. We need 3, 4, 5. So if people can come to do that, that's great, but there's also a risk that you go into the sector that's on the front page of the New York Times, 6 other people have the same idea, and we only need half of those projects. Makes it really, really challenging.
Thanks. Abhishek, you have any quick thoughts here?
I think just to add to that, from my experience, when we look at M&A projects, right, at least in my view, we look at demand first, like how far can we forecast the demand to be positive, and is it even really growing? And I think that's one thing that mining companies are learning is like they need to go more downstream to understand who's using it, how much are they using it. Just to give you an example, like even today, if you talk to a data center, the range, for example, copper, they say you need 70,000 tons of copper in a data center. Some estimates say you need 200,000 tons, right? So you have to understand, it's like all these assumptions go into building projects that kind of dictate how much CapEx you need. And then once even it's deployed, after 10, 15 years when the projects are built, what if the demand is not there, right? Like, so I think one important learning from here is like, and this was told by CSIS group in DC, is that like US has to create this demand in the US, right? Like in the sense, how positive can we grow the EV markets over here? And I think that's going to drive some of these initiatives for onshoring or critical minerals security of supply and de-risking projects as well.
Oh, very cool. Sal, any quick thoughts you have on the demand side?
I mean, I think on the demand side, we've talked about the different sort of architectures, and I think the earlier point about the definition of critical minerals versus rare earths matters here, because in terms of rare earths, you have these agreements, like Project Vault requires the OEMs or obviously for them to buy in. In lithium, for example, which is not a rare earth but is a critical mineral, you've seen interest in terms of the OEMs or from them in terms of some sort of infrastructure, but it hasn't necessarily been created yet. So in that sense, that's not clear. And then obviously in copper, which is to Saskia's, that's her whole domain, but copper is such a larger market, and that's unclear in terms of what sort of architectures we can create to meet that demand. Which I think, regardless of the estimates, whether it's however many more tons we need per year to sustain the data center build out or the AI build out or whatever you may have it, I think what is clear is that you need more. So you have to think about how to create new partnerships and new innovative financing strategies to make that possible. And that's a task that's probably bigger than I can take on, that we four can take on, but we definitely need much more minds focused on it.
Great. We heard a lot from different sides. One area which I particularly care about is the innovation side. And in this sector, like I feel like the innovation has been happening, but in silos. This is what I feel. I'm sorry. Before we move to Q&A, I would love, Sal, if you can tell what are some of the white spaces in the sector that no one is building into, because I feel this seems like a next big frontier for deep tech. That's my personal thing. So.
Yeah, I think I wouldn't necessarily call these white spaces, because I probably wouldn't know about them if they were white spaces, but they're more like gray spaces or spaces that are emerging. I'd say the first thing, and there's a lot of startups and there's a lot of capital, early stage capital being deployed into companies that are doing early stage mineral exploration using machine learning to detect deposits. I mean, the most time intensive thing in terms of opening a new mine is finding out whether what you actually want is there, and identifying where you're boring in, you're finding your deposits. There's many startups that are doing a lot of that work with different applications, but I think that's definitely something that can help reduce the timelines in terms of opening up a mine and making sure that it's viable, and that can reduce the economics of a project, make it 30% cheaper, if you will, if you can do this much faster, and that's just a quick off-the-cuff calculation. The second thing is that the national labs are doing actually a lot of incredible work, and I think they deserve a lot of credit given recent stresses that they've faced in terms of the basic research they're doing in a lot of the projects, specifically coming out of Ames National Lab in Iowa. They're doing a lot of really interesting work in terms of making magnet processing more efficient to produce waste as they're doing all the cutting of the blocks and whatnot. And if you're curious about that, we can talk about that later, because I met with the director of Ames last week to talk about these projects. Oak Ridge National Lab is also doing some stuff on separation technology, which I know, Saskia, you mentioned you're not particularly bullish on that making a significant impact, and I think obviously everything requires some nuance to think about. But they've commercialized a lot of technologies out of Oak Ridge, or this particular one for membrane extraction. That's another important one. Idaho National Lab is also doing some stuff that's been commercialized, which I think brings me to my second big point, which I think is that the actual pipeline in terms of opportunities of white spaces, if you will, is that the pipeline for commercialization from these national labs, where a lot of the basic research is being done, really cutting edge stuff, which is ironic because, I mean, I was a history major in college, so I'm not a scientist, but you think basic research, you think, oh, well, why do we need basic stuff? But basic research is actually what powers a lot of the innovation in this space, and it's what a lot of these national labs do. So that commercialization pipeline definitely needs, I think, more attention. And third, I think to the recycling point, which Saskia talked about earlier, I think there's been a lot of talk about urban mining, if you will, right, collecting used electronics. But I don't think there's many people thinking about the industrial scale logistics that you need to do that if we are going to do that. So that's another space that I'd throw out there that's one where could benefit from innovation.
Great, thanks. We will take, I know we have one more question before we open up for audience. Since this is a room full of MBAs, I'd love to ask Saskia, what would you tell a student figuring out if the space is the right fit for them, or how should they look at this space?
Okay, I'm an engineer, so I don't know if I should really be advising MBA students, but I came here for a very specific reason, right, when I was asked. So why would I as an engineer come to this MBA space? Because I think that folks haven't appreciated the complexity of the mining industry. I think they perceive it, probably all think that we're running around with pickaxes and carts, and we're not. We're actually one of the most high-tech industries out there. I think everybody thinks we're doing dirty, dangerous stuff, and the work that we do can be dangerous, but it is high-tech. It is a complex system that requires not just technology, it requires thought about policy, about people, about community. And so I think this is one of the most challenging problems. I like to say mining is the new rocket science. And if you think getting to the moon is hard, I think mining is even harder. And I think MBA students want to solve hard problems that actually require you to think about many, many facets. And that's why I think come join us in this challenge, because this is all about climate. And I can tell you we're not going to work through the climate problems without mining.
Thank you. I'll go with audience Q&A. Please.
Well, thank you everyone for such great insights, and thanks to you all. This room is leading in all the Q&As among all the 4 breakout sessions, so I'll try to club some of the questions together so that we can get answered most of them. So the first question is, how do we balance stringent ESG standards with urgent geopolitical need to secure mineral supply chains? Are we risking a bottleneck where our sustainability values actually stall the energy transition? And a follow-up question is the carbon tax help in some ways, level playing that field?
Who would like to take it?
Nick, you want to go first?
Yeah, sure. This is one of those horrible situations to deal with, where the benefits of something are hugely disaggregated. We all need more minerals, and the costs are really, really localized. This has been something that every extractive industry has struggled with since the day we started bringing stuff out the ground. I wasn't a great ancient historian, I was a modern history major, so I'm not sure if the Bronze Age came before the other ages, but whenever we started doing this, we've had this problem since then. And some of the best examples we've seen, I think, are countries pushing. There's also a role for the financial markets here. If we look at programs like the Copper Mark program, if we look at what's happened in the diamond industry, if we look at some of the cobalt issues you've discussed. So there's scope for governments, there's scope for industry bodies, and we're not going to solve this challenge if we don't get the ESG side right.
I'll just add to that. I think, in my view, I think it's a good problem to have, because now it enforces companies to work together. So in my view, I think we might see more JVs come together between majors trying to build projects, because they have the expertise to lead projects properly, do the whole due diligence rather than just someone starting a new mine. So I think it's a good problem to have, and something it will enforce more alliances between companies, governments involved in it.
Thank you. Next question is, Congress just removed a ban on mining in the Boundary watershed, one of the most pristine locations in the US, but also the location of one of the largest untapped reserves of minerals in the country. How can protecting natural areas be balanced against the need for minerals when we know there is no way to operate a mine in an area like this without some level of pollution?
I mean, I'll take this, and I think the answer to this can be pretty brief and goes to the point that we were saying earlier in the beginning, which is that, sure, there may be a lot of minerals in the seabed close to our territorial waters. I mean, part of that was the reason why Reagan didn't sign onto the UN Convention of the Law of the Sea, and this is why the US is not yet a signatory to that, which has actually caused, to the geopolitical extension, a lot of problem when the United States tries to talk about a lot of ocean water disputes in the South China Sea and neighboring countries, because we are not actually a signatory to this treaty. But I think what matters here is ultimately, sure, we might be able to mine those minerals and extract them, and say you're going to do that perfectly well without any sort of environmental cost, which is obviously impossible. But then the question is, where are you taking those rocks to process them and to refine them? And I think if you can't answer that question first, a lot of this, unfortunately, will just won't necessarily go in a very productive direction.
Thank you. Well, next question is about recycling. So this is about what should the industry takeaway should be from Ascend Elements and Lee Cycle's bankruptcy, and how can US build a more resilient mineral supply chain, and what role recycling plays in that entire equation?
I can start. So I'm a big advocate for recycling. I don't know about the other panelists, but to me, I think, yes, it cannot replace a production from a mine. Let's be honest about it. But I see two instances. So if you look at the commodity aluminum, well-established recycling case, like almost 50% of Europe's aluminum requirement comes from recycling products, right? So I think that's a very clear case because of the feedstock that you need for aluminum recycling. It's clean. If you look at copper or rare earths, like it's mixed up with plastics, it's mixed up with all the materials. Even for copper, there are 18 types of feedstock just for recycling. It's very difficult right now to optimally recycle, get the cost down. Which to me, second point is it adds more capability for innovation. So more money should be put into this, trying to see how can we reduce the unit economics, try to understand the feedstock better, which is ultimately going to make recycling profitable.
Thank you. Now this one is an interesting one. Are companies trying to extract minerals from asteroid or outer space even viable?
I'll be brief with this one. The answer is yes, companies are trying to do this. If you ask whether it's the unit economics work, the answer is no. But I mean, it's a moonshot, or I guess an asteroid shot, and maybe someone will figure it out.
Mm-hmm. Saskia, is that what you meant when you called this rocket science? I hope it wasn't.
That is not what I meant, but
Okay. Good.
But I will say there's an interesting opportunity when we start, and again, I'm not saying that we're doing space mining, so don't anybody take that as a quote away from here, because then they'll never let me be on a panel again. Okay, so, and there's an opportunity to think about in space, you have to be almost perfectly efficient with your process. So where we're interested is where are those learnings that we can bring back from a terrestrial standpoint, right? When you're in space, once you're out there, you are going to have to get your materials from there. So what are the lessons that we can learn from that we can bring back? So that aspect we're interested in, but don't tell anybody I said we're interested in mining in space or the moon.
Thank you. Next one is, based on yesterday's conversation regarding critical elements and metals, it is viable that we, the US, may have not been on the forefront of the advancement. Is there any coming back from that position? And what would it take to fill that current gap, whether it's infrastructure or regulation, like roles of carbon tax and border adjustment mechanism? Do they create more level playing field for US?
So I'm going to say it's a technical problem, right? But it's a technical problem understanding the systems, right? I want to be really clear. It's not, innovation absolutely plays a role, right? There is new technology, but we need to understand how that technology plays into that bigger system of where do these streams come from, how can we think differently about partnering, and all of those aspects. So I think it's a capability problem from a technical, from a financial, from a geopolitical, but there's a core capability that's really the problem.
Thank you. Next one is, considering recent geopolitical export restrictions on Zimbabwe, DRC, China, how do battery storage and EV OEMs and storage projects developers currently assess upstream battery mineral supply disruption risk?
I can not speak for the companies in this value chain, but I can, I think, make one point that was lost on most people who haven't spent a lot of time in the sector. There is a very inherent stickiness to selling a lot of these minerals into the automotive, especially value chain, because of how long the qualification cycles are. If you're trying to sell graphite, as an example, into an EV battery for an automaker, you're probably looking at north of 5 years for your specs to get sampled and tested and qualified. So this is an industry without a lot of shock absorbers in terms of the ability to switch feedstocks, switch processing, switch providers, and that makes it a really challenging problem to solve.
Thank you. Next one is about growing demand and balancing it with the social cost. So as demand for critical minerals grows, mining impacts like water use, habitat loss, and pollution will also increase. What concrete steps is the industry taking to prevent the energy transition from simply shifting environmental harm upstream?
I can take that up. Just please chime in, yeah. So I think, yes, it is going to drive, so demand is going to drive more mining. But you have to understand the mining processes have become more efficient as well, and I think it will become more efficient. Second thing is, mining companies are aggressively looking at, electric vehicle trucks, equipment. They're testing it's very difficult environments to work in, but they're still trying to make that investments to see if it's even possible. So I think the direction is right. I think the third thing is also just innovation that's coming into the space, given where the demand and supply is. I think it's going to help the industry get better at reducing costs, reducing the emissions that we have, and trying new things in the sector.
Thank you. Next one deals with the regulation. Why does US have longer duration for approval when it comes to critical minerals as compared to China, especially when it is about national security?
I wish we knew, right?
It was a choice that was made decades ago on making that be a priority, right? And you made the comments, right? There was a focus on keeping that capability. There was a focus on keeping the processing and the separation. And now there's a continued focus on investment in other, in where the deposits come from. So there was a view of understanding that entire supply chain, right? And so I think there's a piece, at least from a US perspective, where we have a chance is to take those learnings and think about where we could do it different. The challenge is that these timelines, and again, you go back and look at it from a US perspective and the timeline of political changes versus the timeline of what it takes to build mines. There's an inherent disconnect there. And so again, we have to think about what does that mean for us from a US perspective? Until you think about those things, you're just gonna keep asking these same questions.
And I'll just add just to Saskia's
Please,
point.
please, this is probably not an area I should speak in.
No. I'll just add, just because I'm aware of the time and I like to give questions rather than answers sometimes. I think the right question to ask isn't necessarily why are US permitting timelines so long, but why are some countries so short? What about their value systems and their political systems allow them to have timelines that are so short? That I think is the most.
Well, thank you. I think that will be a wrap.
Thank you. Thank you so much. I have a quick question so we had a plenary session last evening and critical minerals got featured in it, and I loved the question there, which was, how durable is the ever market premium for critical minerals in next 5-10 years, or does globalization is going to kick back in? Broadly, do you think if globalization will come back in and the current premiums which we are seeing will then be normalized, will be gone?
I suspect companies will pay a premium for security of supply and will never know because it'll be through bilateral contracts and it won't come into public data feeds. But I see it happening today. I would love to hear why I'm wrong from anyone else in the panel.
Well, thank you, each one of you. This was fantastic discussion. And is this last session? Or?
No, I think there is.
Oh, okay. Please enjoy the rest of ClimateCAP.
So, thank you so much.